Welcome back to Stock Predictor. Today we're diving into a topic that smart investors are always searching for: hidden stocks with explosive potential, not the ones already hyped on every news channel, but the quiet names building momentum behind the scenes, the kind of stocks that can move fast once Wall Street finally notices. And in this video, I'm revealing 3 hidden stocks that could be on the verge of a major breakout, so make sure you watch till the end because the third one is the most overlooked of them all. Before we start, remember this is not financial advice. This video is for educational purposes only. Always do your own research before investing. Now let's get into it. The first hidden stock that could be about to explode comes from a sector that continues to reshape the global economy: artificial intelligence and data infrastructure. While most investors chase mega caps, this company operates behind the scenes, providing the backbone that makes AI and cloud computing possible. The company is Super Microcomputer, and even though some investors have heard the name, very few truly understand how powerful its positioning is. Super Micro specializes in high-performance, energy-efficient server solutions, and here's why that matters. Every AI model, every cloud service, every massive data center needs powerful servers optimized for speed and energy efficiency, and Super Micro has built a reputation for delivering custom solutions faster than competitors, which gives it a serious edge in a rapidly evolving market. Financially, this company has been quietly strengthening. Revenue growth has accelerated as demand for AI-optimized servers increases. Margins have improved thanks to scale and operational efficiency, and unlike many growth stocks, Super Micro has demonstrated the ability to grow without burning massive amounts of cash, which is extremely important in today's interest rate environment. Another key reason this stock could explode is institutional interest. Large funds tend to move slowly, but recent filings suggest growing exposure from long-term investors, and when institutions build positions in a stock with limited public hype, that's often the calm before the storm. Once earnings surprises hit or guidance improves, price moves can be sharp and sudden. From a technical perspective, the stock has spent time consolidating after previous rallies, which is exactly what strong stocks do before the next leg higher. Volume patterns suggest accumulation rather than distribution, meaning smart money may already be positioning ahead of a bigger move. Now let's move to the second hidden stock. This one operates in a sector that most retail investors underestimate: industrial automation and smart manufacturing. While it may not sound flashy, this industry is critical as companies worldwide look to reduce costs, improve efficiency, and deal with labor shortages. The company to watch here is Rockwell Automation. Rockwell Automation provides hardware and software solutions that allow factories to operate more efficiently, safely, and intelligently. As manufacturing becomes more digital, demand for integrated automation systems continues to rise, and Rockwell is one of the leaders in this space. What makes this stock especially interesting right now is its transition toward higher-margin software and services. Historically, industrial companies relied heavily on hardware sales, which can be cyclical, but Rockwell has been expanding its software offerings, subscription models, and recurring revenue streams, which can dramatically improve long-term profitability and valuation multiples. Looking at the numbers, cash flow remains strong, the balance sheet is solid, and the company has consistently returned value to shareholders through dividends and buybacks. Yet despite all of this, the stock doesn't receive the same attention as trendy tech names, which creates opportunity for patient investors. Another catalyst that could push this stock higher is reshoring and infrastructure investment. As more companies bring manufacturing back closer to home and governments invest in industrial modernization, demand for automation solutions increases, and Rockwell is positioned to benefit directly from these macro trends. Market sentiment around industrials has been mixed, which is exactly why this stock is still flying under the radar. When sentiment shifts and investors start rotating back into quality industrial names with strong cash flow, stocks like Rockwell can move fast. Now let's talk about the third and most overlooked hidden stock on this list. This one operates in the energy transition space, but not in the way most people expect. Instead of producing energy, this company focuses on the infrastructure that makes modern energy systems more reliable and efficient. The company is Quanta Services. Quanta Services provides specialized infrastructure solutions for electric power, renewable energy, and communications networks. As the world moves toward renewable energy and electrification, massive investments are required to upgrade grids, build transmission lines, and support new energy sources, and Quanta is one of the key players making this transformation possible. What makes Quanta especially compelling is its backlog. The company has secured years' worth of projects, providing strong revenue visibility, In an uncertain market, visibility matters. Investors are willing to pay a premium for companies that can show consistent future growth, and Quanta fits that profile. Financial performance has been steadily improving, revenues are growing, margins are expanding, and management has demonstrated disciplined capital allocation. Rather than chasing risky projects, they focus on long-term contracts with predictable returns, which reduces volatility and downside risk. Despite these strengths, many retail investors overlook Quanta because it's not a household name, it doesn't produce flashy consumer products, and it rarely trends on social media. But historically, some of the best performing stocks are the ones doing essential work quietly while the spotlight shines elsewhere. Another important factor is government policy. Energy infrastructure investment continues to be a priority across multiple regions, regardless of political cycles. Grid resilience, renewable integration, and electrification are long-term needs, not short-term trends, and companies like Quanta are positioned to benefit for years. Now let's tie everything together. These three stocks share a common theme. They operate in critical industries, they generate real revenue, they benefit from long-term macro trends, and they are still relatively underappreciated by the broader market. This combination is where explosive upside potential often comes from. It's important to understand that stock explosions don't usually happen overnight. They are built through strong fundamentals, smart management, and favorable industry dynamics. Then one catalyst, an earnings beat, a major contract, or a shift in market sentiment, ignites the move. If you're building a long-term portfolio, consider looking beyond hype and focusing on companies with durable competitive advantages, solid financials, and exposure to unavoidable trends like AI infrastructure, industrial automation, and energy transformation. As always, timing matters. No stock goes up in a straight line. There will be pullbacks and volatility, but volatility is the price investors pay for higher returns. The key is having conviction based on research rather than emotion. If you found value in this video, make sure to like, subscribe, and turn on notifications so you don't miss future hidden stock ideas. Comment below which of these stocks you want a deep dive on next, and remember, smart investing isn't about chasing what's popular, it's about finding what's powerful before everyone else sees it.